See, we've been talking for the longest time about this commodity super cycle. Is the demand in China there?
Yes, we think the long-anticipated commodity rally is happening now because there's synchronized demand improvement in China and in the rest of the world. For China specifically, we've seen double-digit growth in apparent demand for steel, copper, aluminium over the past 2 months, actually off a pretty decent base of 2020, if you still remember that China returned pretty soon after COVID into the second quarter of last year. So we're also seeing steel prices reaching multi-year highs and iron ore reaching decade highs on the back of strong construction activities from the property sector, as well as solid demand from the export-driven manufacturing sectors.
And yet you are neutral on iron ore. Is that because we already saw the price rally?
Indeed, the bulk of the price rally already happened. We are seeing a commodity produced at a cost of as low as $20, $30, now trading 180, 100 to even, touching multi-year highs of 185 potentially. Prices already made big moves, and potentially we're going to see a mean reversion to producing cost level. But the process of that mean reversion can be pretty bumpy because steel demand remains very solid. And steel making margins are now also at multi-year highs, with Chinese steel makers making 1,000 RMB per ton on a cash basis. Outside China, steel makers are printing $300 to $500 per ton. So some of that profitability are going to be shared with iron ore miners, despite the iron ore supply being pretty solid.
Yeah, you look at that, you think surely the risks are skewed to the upside for iron ore prices, right? We've had Rio Tinto, BHP, Vale all pretty much coming in short of their production estimates. Is there a real kind of struggle to try and keep up with the level of demand that we're seeing out of China?
Indeed. We think over the next 1 to 3 years, China's property developing activities, particularly new starts, and projects under construction will taper off because we've seen early signs from reduced land purchases from developers. At the same time, developers are also under pretty strict scrutiny on financing. So this is a theme that is due to come sooner or later, but it's not happening today in our view because developers are still trying to facilitate the build out of existing projects in order to accelerate cash payback. Now, this is also part of that broad China credit pullback concern that a lot of market participants are concerned of. So indeed, we've seen credit impulse falling pretty substantially from the peak, and infrastructure sector seeing the first wave of that weakness, which will spill over to some of the other old economy sectors down the road.
What about the outlook for copper, given that we continue to see supply disruptions out of Chile, but also some of the Chinese smelters being impacted by the government's ambition to get to carbon neutrality by 2060?
Copper is an interesting one because we've seen pretty strong end-use demand for copper coming not just from the Chinese sectors we spoke about, but also outside China, where durable goods spending spiked and construction activity also picked up because of a booming U.S. housing market. And these are all very supportive of copper demand. So therefore, we're seeing the market shifting into deficit this year and potentially resulting in a 15 to 20% upside in copper prices in the near term, taking spot price to all-time highs of around $10,000 to $11,000 per ton levels. So we're a believer of the copper super cycle, but the super part of that cycle is going to happen now over the next 3 to 6 months, where we see the most deficit among the next kind of 1 to 3 years.
Tracy, super quickly, Palladium near record highs, your call.
Well, Palladium is set to stay in deficit for the next 2 or 3 years, given a lack of supply response to high prices. And therefore, we expect the rally to continue. And in fact, we do foresee spot price to touch $3,200 per ounce within the next 1 to 3 months, given a very tight supply, as well as potential return of demand after the ongoing chip shortage issue at automakers get resolved. So by then, you'll see a wave of restocking for raw materials, and that would help Palladium.